Morning, Yousef Alshammari, Editor-in-Chief, C Markets. Good evening, good morning, Yousef, and thank you so much for joining us.
Hello, Alexander. What are you?
Very happy to have you back on the show, Yousef. I was wondering, what's your take on the deal? I mean, do you believe this is a significant deal for the industry?
Well, absolutely. If you look at the UAE and its economy, it's one of the most attractive economy in the Middle East for foreign investments. In fact, the United Arab Emirates is on track to become a net gas exporter. And that's why I believe the deal, which has taken six large companies to purchase this or to make this new ADNOC gas pipeline asset, as will be such an important deal towards achieving that target, while assuring the markets that the UAE will also be a attractive environment for foreign investments, that the United Arab Emirates is actually very much well engaged with.
And do you believe this is going to be a positive?
Well, in many ways, I think it's excellent to have foreign investments in your country, and regardless of the targets that they are trying to achieve. I think it will have a remarkable impact on the UAE economy as a whole, moving it from an economy that, especially in Abu Dhabi, an economy that continues to be very much driven by oil, to an economy that is diversified into natural gas and other foreign investments. So certainly, I think it will be very good for the UAE economy and for the whole industry investing in that gas pipeline as a whole.
Well, let's get back to the crude oil. We do see some positive movements today over there, of course, after White House trade advisor Peter Navarro has clarified that US-China phase-wide trade deal is not over, and that his comments to Fox News was taken out of context. So certainly China is extremely important for the crude oil market, no doubt about it. So far, WTI is trading $41 per barrel and Brent $43 per barrel, both trading higher by more than 1.5%. This Tuesday morning. What's your take on the market? What do you expect from now on? Do you expect a lot of volatility as we saw in the past few months?
Well, absolutely. This morning we have published a report on oilprice.com, and we've been actually debating a case for a $50 price in the second half of 2020. Certainly, economies now are not. And the case of the pandemic now is much better situation to what we saw in the second quarter of this year. Fundamentals are strengthening. We continue to see tighter supplies, especially from the OPEC plus cuts and the North American supplies. And demand is recovering. Currently, demand is set to have reached 90 million barrels per day in June. With what we've seen in the JMMC meeting, the Joint Ministerial Committee meeting of OPEC Plus that took place last week, we have seen very good compliance set at 87%, with countries falling to or that have fallen behind their targets will be compensating for all the missing targets in Q3. That includes Iraq, Nigeria, Kazakhstan, as well as Angola. In fact, these countries have even all submitted their plans, practical plans that show a roadmap towards achieving 100% compliance by September. So I think this has all been factored in the markets now. We also, if you look at the U.S. oil supplies, it's now 1.7 million barrels less down compared to last year. Current U.S. supplies stand at 10.5 million barrels a day compared to just close to 13 million barrels in 2019. So that's have all being factored into the economy. In fact, also the market is not expecting a reimposition of lockdown measures as what we saw in Q2, despite continued spread of COVID-19, despite warnings by WHO of fears of a second wave of the virus. Yet we also continue to see the number of recovery in cases globally continues to rise dramatically. Also the number of deaths from the virus is also declining, and that has been that's something very important. That's what we currently see in the markets now.
If we use the crude oil as a proxy for the economy, what would be your assessment of the current situation?
Well, crude oil market is certainly improving compared to what we saw in beginning of Q2. We're still in the Q2, but the market is in much better shape now. It looks to be on a promising directions. We still think that demand will recover, and the demand recovery will be associated with economic recovery as a whole and across all the economic sectors. Certainly, crude oil continues to be a major indicator for the healthiness of the economy. Just look at when the oil price deteriorated in April and May. We have seen all the stock markets in New York and elsewhere all making significant losses. We've seen many companies, major companies, filing bankruptcies. And I believe the recovery of oil markets now continues to be reflected on other markets, especially the U.S. stock markets.
Certainly. I was wondering, what's your take on the majors? What do you expect from their, quarter earnings?
Quarter earnings for oil companies?
Yeah, all the major giants.
There's been some significant hits in Q2 and even Q1 earnings due to the downturn of oil revenues. Yet, I think many companies have taken several measures over the past period in terms of spending efficiencies. We've seen many companies that have cut down the number of staff by a significant amount. Just look at BP. They've reduced the number of staff by about 10,000 people. And many companies have also taken similar steps in order to reduce the cost, although that's not certainly not good news for many people working in the oil industry, but just reflecting this on the revenues of the company. I think they will be in a better shape compared to what we saw beginning of the year, where it's driven mainly by the recovery in oil prices. Yet, I still think that many projects will not come on a stream now. The oil price is not at a very high, sufficiently high level to drive a lot of the expensive projects that oil majors actually operate in the Gulf of Mexico and in North America and many other places around the world. That needs a price of at least some would need a price of $20 to break even. Some would need $40. So I think we still continue to be a better recovery in the prices in order to improve the economic returns for oil majors in Q2 and Q3 and even throughout the second half of 2020.
Yousef, one final question. How important for the crude oil market is the trade relation between U.S. and China?
Certainly, it's an important, has got a very important role to play. Yet, the impact of the trade relations now is not as I don't see that being factored in on the markets compared to its impact back in 2019 when we didn't have the COVID-19 crisis. The markets had that as a major factor to be worried about. And this morning, there's been some good tweets coming from the U.S. president of kind of assuring the markets that there is that the agreements between the two sides is still valid, and China will continue to deliver its commitments in terms of buying products at certain amounts from the U.S. So I think the current state of the deal is not in a bad shape. I think it's in a good shape currently to keep the market recovering.
All right. Thank you very much. Yousef Alshammari, Editor-in-Chief, C Markets. Thank you so much for joining us. Have a great day.
Always a pleasure, Alexandra. Thank you for having me.
Well, we're heading for a very quick commercial break, but stick around because we have many surprises for you in the next part of the show.